Yesterday I had 550 profit on the SPX options. I made a video for that and I kind of messed up how I recorded the audio in the video. Cannot figure out how to edit it. So I kind of lost that, but luckily I'm in a trade today where I'm actually up another right now 580. Hopefully make 690 today. So, and it's basically the exact same thing I did yesterday. So I'm going to break down what I did exactly today, show you how I did it, how I'm selling options on the SPX, hopefully making a total of 690 today. We'll see. I'm going to do another video and hopefully this one works out and I can edit for you. All right, let's get started. All right, so as I mentioned, this is on the SPX. You can see it right here. And basically the SPX is the S&P 500 index. And the reason I like to sell options on that is because it's super expensive. The price right now is $4,186. So it's worth a lot. So the options are worth a lot. And if I sell the options, then it's worth more money. So I'm selling something that's worth a lot more. But I like to use the SPY. The SPY is the ETF behind the SPX, because I like to look at volume. Volume's the most important thing for me in trading, and so I like to look at the volume. So the way I approached it today, I had some things I had to do this morning, some work, so I actually put on this trade, probably like 10:45, something like that. It was right around here, so about 11:40 actually. This is when I got into the trade. And so what we saw is we had a nice push up, and then a big breakdown all the way down throughout the day, right? Throughout the morning, and you saw some good volume there, right? So as you actually come down and work your way down here, if we go to a 15-minute chart, what can I see across here, right? If I look across here, what do I see? I see that this was clearly a massive breakout area just the other day, 2 days ago, okay? So I can see that the other day, this clearly broke out and started to make new highs. And this is when there was a huge rush of volume. We had a really strong day that day, and it had a really nice push. So I can see that on the SPX as well. I can see that we broke up from here, came through, and then that morning we slammed up with obviously good volume and never looked back. So what does that tell me? That tells me that there's a lot of people, algorithms, whatever you want to say it is, there's a lot of volume around this area because we broke up out through it and it didn't look back on that day. So I draw a line right there. I actually took that previous high there from that day before. I just draw a line there. I can see, okay, obviously there's a lot of volume around there. And I kind of wait and I see, okay, we're right down, right below it, or right above it. So this is perfect. I now know that price is in an area where there is a ton of volume and there was a big push just the other day. So just like naturally, it's like, okay, this might be an area where there's going to be a really good push. So we go down to the 1 minute and I'm watching the 1 minute and I'm kind of thinking, okay, we've come down. We had a little bit of a push up here. We came down to retest it again. We never quite go below it. We kind of just sit right above that little high that we saw before with the nice big volume push. And then we get a nice little move right here. So right on this green, big, large candle here, I kind of stay patient, wait to see. It bounces down and it continues up and I sell puts. Now, how do I do that? What does that mean? I come over here to trade and I'm just trading 0 day to expiry, 0 DTE, okay? And I look at the puts. Now, the reason I want to sell puts is because I believe that this could be a bottom for the market today, and so we would get farther away. Now, if I bought a put, I want the price to go down, but if I'm selling a put, it means I want the price to go up, because if I sell option contracts, I want the value of those contracts to get lower because I'm selling it, right? So I want to buy them back for cheaper later. It's like shorting the stock. So I come over here to look at the puts. And at the time I looked for something that was close to where it was, 41.65, 41.70. That's about where the price was, 41.65.70. It's just below. The puts are just below where price actually was. So you come over to the Analyze tab. Real quick, the blue line is showing you potential profit for the day because these expire by the end of the day, and the purple line is showing me current profit. So right now I'm up $570. So I actually sold the puts when they were right around here. So I got a $2.30 credit. So you can see here, I sold the 4170 put, and I buy the 4165. 650 to 880, the difference between the two is $2.30. That means that I actually take a credit of $2.30. You times that by 3 because I did 3 of them, 230 equals 690. So you're going to see here that $690 is my potential profit as long as the price stays above 4167. As long as it stays above 4167, I'm good. So basically right around here. The price just has to stay above this, and I'm going to make $690. Now, this could just be a nice little push here, and we'll see what happens. Typically, because we kind of broke through the 15 EMA, I imagine it's probably going to want to come down, maybe touch on this 200 EMA here, maybe touch down on the 15 EMA on the 15-minute chart, and we'll see if it continues going on from there. It's 2 o'clock right now, so I have 2 hours left for the price just to stay above this line right here, and I'll make $690. Now, the reason I did it this way is because I'm super close. When I put on this trade, I was close here, right? So as the price is here at the 4170 mark or whatever it is, at the time, I gave it until about 4165 because I figured if it goes below this line that I had drawn, right? I had it here just a second ago. If it goes below this line, then that's kind of my cue to be like, all right, get out of the trade. There clearly wasn't enough volume to push this trade up. I was wrong with my hypothesis that there's a lot of volume here and there's probably going to be a decent push. I need to just get out of the trade. Well, at the time that meant I was going to lose about $100, $120, something around there. It's always fluid when you're selling the options, but pretty much it was about $100 to $150 I was going to lose, but I had the potential to make, like I said, $690. And right now I'm up to $580. So when I'm looking at that, okay, I have the potential to lose $150, but I have the ability to make $690 possibly. That's really good risk to reward ratio. Now, the reason I like to sell the options, now this is super important, so pay attention. The reason I want to sell the options is because during all of this push here and then this up, and then we kind of come up this way and we crank back down and we go up here. Oh, wow, we're doing great. And then it slams all the way down here. If I bought options to try to trade this, try to day trade this, 100% I would have been whipsawed out here. I would have got definitely out here. I would have got out here. And I probably would have just made like $100 or something like that. Maybe not even, because I would have entered the trade about here. And by the time we get all the way through here, you got to understand what contracts, option contracts, are consistently losing their value as they get closer to expiry date. So if you had a contract that's 6 months out, it's maybe not going to lose all of its value in these little moves. But when you have something that's expiring by the end of the day, every minute counts. 15 minutes, 20 minutes, that matters. Because as we get closer to the end of the day and that contract expiring, it's going to become worth less because it only has so much time for it to actually become worthy. So as you're coming along here, if I entered here on this, bought a contract, look at this. It comes all the way down here in the matter of 3 minutes and goes right down to my break even. So maybe I was up $200 here. Now I'm break even. I'm seeing massive red candles. Oh man, I don't know what to do. I was up $200. I'm going to get out now. Boom. Thanks for coming out. Thanks for buying the contracts. Appreciate it. See you later. And then look at this. Oh, thanks. Boom. And it rips off. Now you're sitting here. Now you're frustrated. Now you're like, I was up 200 and then I got out and it's 0 and then it went flying up. These are the things that really bug me when I'm trying to day trade and buy options. But when I sell the options, what do? Look how I lean back in my chair. I don't have to worry about a thing because I know I'm staying in this thing until it goes below this line right here. If it goes below this line, I'm going to lose about $100 to $150. Now, as time goes on, that gets less and less too, because look here. Analyze, if I actually had it all the way down to 465, right now, if it did that, I would only lose $55. So my risk parameter actually goes down as the day continues on. This is exactly what you want to see when you get into this type of trade. You want the price to quickly get away from where you from where you sold the options. But if it doesn't kind of happen and it whipsaws kind of around and this and that, you don't have to worry about this, because I just have to sit here and know, as long as it doesn't go below this line, I'm just going to stay in it and I'll make $690. So it kind of gets rid of that stress factor of like, oh, I was up 200, now I'm only up a zero, and your P&L's flying all over the place and everything like that. I just set it and forget it and let it chill. And then I hope that it stays above 41.65. So I'm trying to find bottoms and tops of the market and selling calls up here if I think it's going to go down. And I'm selling puts down here if I think it's going to go up. And today I'm probably just going to leave this on because we're getting really far away. It's going, it's moving. So I'm probably going to leave this on for the rest of the day. Unless I can, oh man, I'm up like 600 now. So I might actually take this off. It might be worth it. We'll see what happens. But if I wanted to take it off, I'll show you right now a little bonus footage. I would just right click. I would hold control and right click right here. And I can just create closing order. That's going to bundle them together because this is called a vertical spread I'm doing. So now it's going to buy back the opposite of what I did. I sold and I bought a contract. Now it's going to buy it back and sell it. So I could actually sell it for a 25-cent debit. And I could end up taking a lot of profit on that, about $600 right now. And you know what? It might make sense just to do that because then I don't have to worry about it for the rest of the day. But I have to pay commissions, so I got to see kind of what happens in the next 15, 20 minutes. We'll see what happens. But I would just click confirm and send. Boom! That's it for the day. Gonna make $600. Yesterday I made $550. Hopefully now I can go and edit this video properly and I won't mess it up so that you can learn a lot more stress-free way of doing things, and I don't have to get whipsawed in and out. Thanks for sticking around at this point. If you do have any questions, comment below, and if you wouldn't mind, like and subscribe if you found some value. I'll catch you on the next one.